faithfully delivering value and interpreting great books worldwide. Hi, this is Sally with Book Talks. Today, I'm diving into the book Charlie Munger, A Biography, which tells the legendary life of the outstanding American investor Charlie Munger. The author, Janet Lowe, is a renowned American journalist and best-selling author who has long studied value investment masters like Benjamin Graham, Warren Buffett, and Charlie Munger to create Charlie Munger. A biography. Janet spent 3 years conducting extensive interviews with Charlie Munger, his family, and friends. In China, people first knew the stock god Warren Buffett and later discovered an unsung hero beside him, Charlie Munger. Buffett is the chairman of Berkshire Hathaway, and Munger is the vice chairman. Their partnership is hailed as the dream team in investing, creating legendary successes. And in 1918, Berkshire Hathaway ranked 10th in the Fortune Global 500, with its stock price soaring from $19 per share in 1964 to $300,000 in 1918, a 19% annual growth rate over 54 years, are outpacing the S&P 500's 9.8%. On 2019's wealth rankings, Munger's fortune hit $1.7 billion, much less than Buffett's $80 billion, but he played a crucial role in their extraordinary partnership. Buffett holds Charlie Munger in the highest regard. Buffett said, "Charlie expanded my horizons with his intellect, helping me evolve from an ape to a human at lightning speed." Munger is a deeply learned sage and mentor. He's like a perpetual learning machine, always applying knowledge in life. Li Lu, Munger's Chinese disciple and investor, once noted that Munger's investment success stems entirely from self-discipline and learning. Munger especially loves reading biographies. Buffett mentioned that Munger reads hundreds of biographies a year, even studying lives like Einstein, Darwin, and Newton. Munger believes biographies let us befriend history's great minds. Across time, he himself drew wisdom from Benjamin Franklin's life. As the French writer Romain Rolland said, "Behind every great man lies suffering," and Munger is no exception. Munger's early life was far from smooth. Some phases were downright tragic, and his wealth-building journey wasn't as straightforward as Buffett's. But through courage, diligence, and wisdom, Munger overcame life's hardships, evolving from a lawyer into an extraordinarily insightful investor. All right, next I'll explore Munger's life story, career journey, and his wisdom. These three parts will help us unpack Charlie Munger's biography. First, let's dive into his life story. On January 1st, 1924, Charlie Munger was born in Omaha, Nebraska, which also happens to be Warren Buffett's hometown. The Munger family struggled financially early on. Munger's grandfather, a self-taught man, eventually became a federal judge. This dramatically transformed the family's fortunes. Old Munger's self-reliance and emphasis on family values deeply influenced Charlie. Both of Munger's parents attended college. His father graduated from Harvard and became a successful lawyer. Though Munger's childhood coincided with the 1930s Great Depression, his father's thriving law practice shielded him from hardship and ensured quality education. Interestingly, young Munger worked part-time at Buffett's grandfather's grocery store. The job was brutal, 12-hour days of manual labor for meager pay. These experiences ignited Munger's fierce desire for financial success. Munger recalled, "I was fanatical about getting rich, but not to buy a Ferrari. I craved independence and self-reliance." Munger excelled academically, loving math, then obsessing over physics for its logical rigor. In 1941, 17-year-old Munger graduated high school and enrolled at the University of Michigan for mathematics. However, World War II disrupted his college journey. On December 7, 1941, Japan attacked Pearl Harbor, thrusting America into war. Nearly all young American men were drafted, Munger included. In 1942, Munger left college to join the U.S. Air Force. The next year, he was sent to Caltech for training. After meteorology studies, he became a weather analyst stationed at an Alaskan military base. In that turbulent wartime, many young Americans sacrificed their lives on the battlefield. 1941 cost the U.S. 400,000 lives. But Munger was fortunate. He was stationed in safe areas, never directly threatened by the brutal war. However, no one gets lucky forever in life. Little did Munger know a storm was brewing on his life's path. In 1945, while still serving, Munger married Nancy Huggins. At their wedding, Munger was 21 and Nancy 19. Perhaps due to wartime pressures and their youth, this rushed marriage planted seeds of trouble. 8 years later, in 1953, they divorced, a blow Munger hadn't recovered from. Then came another devastating blow. Munger had a son and two daughters at the time the couple divorced. So soon after, his 8-year-old son Teddy was diagnosed with severe leukemia, news that stunned Munger. In those days, leukemia was incurable. Bone marrow transplants hadn't been invented, making it a death sentence. With no health insurance, Munger bore all treatment costs himself. Munger tried every possible cure, but nothing worked. He could only watch his son slowly succumb to the illness. Devastated, he repeatedly held his child, trying to comfort him. Then he'd step away, weeping as he walked. The agony left him gaunt. The next year, profoundly heavy. At 30, Munger had lost his marriage, son, and savings, his darkest hour. Facing life's unpredictability, Munger refused to drown in despair. He said, "When facing tragedy, never lose faith and turn one tragedy into two or three." Munger admired Stoic philosophy. This school views suffering as inevitable. Our duty is to meet fate's challenges with reason and courage. Ultimately, reason conquered self-pity. Munger endured life's toughest trials. Throughout his long life, he consistently upheld reason and courage. At 54, Munger developed an eye disease requiring surgery. Complications from a failed operation left him completely blind in his left eye, which had to be removed. His right eye only retained vision after another surgery, yet none of this halted his relentless pursuit of knowledge and career. For the next 40 years, he still read hundreds of books and countless periodicals annually, ultimately achieving monumental professional success. After weathering life's storms, sunshine finally broke through for Munger. In 1956, Munger remarried, finally finding lifelong happiness. Coincidentally, his second wife was also named Nancy. They shared many interests and core values. Nancy became his supportive partner. When they married, each brought 2 young children, and they later had 4 more together. In 1960s America, raising 8 children was undoubtedly an immense challenge. It's another story of hardship yielding to sweetness. Until Nancy's passing in 2010, they shared 54 years together. Despite personal tragedies, Munger remained an active philanthropist. Passionate about education, he served on Harvard-Westlake School's board for over 25 years, including as chairman. He and Nancy donated $7 million to build the Munger Science Center, even contributing to its design. Surprisingly, Munger actively championed the 1969 California Supreme Court case that struck down abortion bans, establishing women's reproductive rights, a landmark for women's rights. All right, that covers Munger's life story, marked by divorce, losing a child, and blindness. At times, his suffering exceeded most people's, yet through reason and courage, he conquered fate's challenges. Now let's explore part 2, Munger's career journey. After 201, Munger entered Harvard Law School. After graduating in 1948, he became a lawyer like his father, working at a Los Angeles firm for 13 years before founding his own practice. After gaining renown, While practicing law, Munger began dabbling in investments. First, through a friend's introduction, he ventured into real estate, earning his first fortune. Then, in 1962, he established an investment management firm, handling funds from relatives, friends, and former clients. By chance, Munger met Buffett. In 1957, Buffett was managing investments for relatives back in Omaha. And one day, Buffett visited neighbor Dr. Davis to pitch stock investments. Surprisingly, Davis agreed immediately, saying, "You remind me of Charlie Munger." This was Buffett's first time hearing Munger's name. He was both shocked and intrigued. In 1959, Munger returned to Omaha to settle his father's estate. Through the Davis family's connection, he and Buffett met for the first time. This meeting sparked the legendary partnership of two investing giants. Buffett was 29, Munger 35, instantly captivated by each other's intellect, wisdom, and unique personalities. Buffett passionately urged Munger to abandon law for investing. Living in different cities, they didn't immediately form a partnership. Throughout the 60s, they debated investments via long calls and letters, recommending stocks to each other. Initially casual partners, their joint investments steadily grew. In 1978, their co-owned diversified retailing and blue chip stamps merged into Berkshire Hathaway, making Munger vice chairman. They embarked on a truly united investment journey. Buffett described it, "A Munger's eyes, he's my ears." Together, they crafted legendary investments: See's Candies, Washington Post, Coca-Cola, Gillette, American Express, Wells Fargo. To this day, 89-year-old Buffett and 95-year-old Munger continue their legacy. Munger's greatest influence on Buffett was transforming his investment philosophy. Before Munger, Buffett's approach was heavily influenced by his mentor Benjamin Graham. Simply put, Graham advocated buying cigar butt stocks, deeply discounted companies trading below net asset value, where quality mattered less than price. However, Munger pointed out a blind spot. Graham underestimated businesses worth paying premium prices for. So Munger realized that buying wonderful companies at fair prices beats buying mediocre ones cheap. Over time, high-quality compounders generate vastly superior returns than average businesses. This shift crystallized in their See's Candies investment, a milestone evolving their approach. See's Candies was originally family-owned. Founded in 1921 as a single store, it built its reputation on premium confections. After 50 years, it commanded exceptional brand loyalty across California. In 1970, the family sought to sell controlling interest. And learning this, Buffett and Munger eagerly negotiated with See's owners. See's had $7 million book value, but owners demanded $30 million, 4 times net assets, seemingly steep. Buffett and Munger capped their offer at $25 million, a $5 million gap from the asking price. Even $25 million tripled book value, far above Buffett's historical price thresholds. This clearly reflected Munger's influence. When considering See's profitability, ROE, low capex, cash flow, and pricing power, the premium price was justified. Initial talks deadlocked over the price difference. After Buffett held firm, the family conceded to the $25 million offer. Buffett and Munger got lucky with this deal. They later admitted rejecting See's over a $5 million price gap would have been foolish, a huge mistake. That investment ultimately earned them billions. More importantly, it pioneered their quality dash company strategy and built confidence. Buffett later said, "Without See's, we wouldn't have bought Coca-Cola." This marked their entry into a new phase of value investing. But even masters faced setbacks. Munger endured market crashes and wealth erosion. From 1962 to 1969, his firm delivered 37% annual returns, crushing the Dow. Then the 1970s hit. The Fourth Middle East War sparked an oil crisis, battering global markets. From 1973 to late 1974, the Dow crashed from 1,100 to 500 plus points, and it was nearly halved. Munger's top holdings, Blue Chip Stamps and New America Fund, plummeted hard. His performance trailed the market for 2 straight years. The U.S. market became a nightmare. Wall Street drowned in gloom. Headlines blared the death of equities. Munger later recalled, those were tough times. Amid the crash, Munger held firm, convinced his stock's true value dwarfed market prices. As Graham said, short-term markets are voting machines. Long-term weighing machines, short-term swings reflect sentiment, but prices revert to true value. In 1975, markets rebounded. Munger's firm soared 73% that year. Over 14 years, his partners earned 19.8% annual returns versus the Dow's 5%, massively outperforming. The following year, Munger dissolved his investment partnership, converting partner shares into Berkshire Hathaway stock. Mhm. And over 40 years later, most early investors became billionaires. Many turned modest investments into astronomical returns. Munger later concluded, if you can't calmly handle 50% or more market declines occurring multiple times per century, you shouldn't invest and will underperform rational investors. Meaning, panic selling quality stocks during crashes prevents optimal investment outcomes. From 1970s experience, Munger reinforced the importance of rational response to volatility and courage in adversity. But real-world investing isn't just buy and hold. It demands confronting challenges, sometimes personally intervening. Now, let's explore how Munger and Buffett personally rescued Salomon Brothers. And founded in 1910, Salomon Brothers was a Wall Street powerhouse and Berkshire's brokerage firm. Buffett and Munger highly respected its CEO until in 1987, hostile takeover threat emerged. They intervened. Berkshire invested $700 million in preferred shares, becoming Salomon's largest stakeholder at 12%. These shares paid 9% annual dividends and were convertible to common stock after 5 years. It seemed a guaranteed win at the time. Yet this investment didn't conclude smoothly. 4 years later, crisis struck abruptly. In 1991, media exposed Salomon's scandal. Its bond department manipulated treasury auctions through illegal overbidding. Buffett and Munger were horrified. Executives had concealed the violations for months without reporting to regulators. In the chaos, Munger was the first to accurately assess the severe consequences of the incident. Salomon Brothers would not only face heavy government fines and trading bans, but could even go bankrupt and shut down. Buffett and Munger clearly understood that the longer Salomon's issues dragged on, the greater the accumulated risks. They couldn't just remain passive investors watching the company slide into the abyss. They had to actively intervene, rescue it, act swiftly, disclose the truth, correct internal errors, and regain trust from regulators and the market. At the emergency board meeting, Buffett and Munger insisted on principles of integrity and transparency, firing the negligent CEO and related executives. Buffett was appointed chairman to handle the crisis, while Munger served as an advisor and member of the audit committee. They brought in capable, trusted individuals to serve as interim executives. Buffett and Munger staked their own credibility and reputation, personally testifying at congressional hearings, voluntarily disclosing all truths, actively communicating with government agency heads, and proposing comprehensive reform plans. Buffett was forced to serve as an extremely busy chairman at Salomon for 9 months. Exhausted, while Munger, nearly 70, had to fly back and forth between New York and Los Angeles, enduring long flights of 5 to 6 hours each time. Thanks to Buffett and Munger's relentless efforts, Salomon avoided disaster. Its operations weren't halted and the company wasn't sued. In 1997, Salomon Brothers was acquired by Travelers Group, and Berkshire received 3% of Travelers Group's shares, worth $1.7 billion at the time. Thus, their investment in Salomon took 10 years of twists and turns, but ultimately turned a profit. The investment in Salomon Brothers was arguably the most perilous experience in Buffett and Munger's investing careers. This is a classic case of a low probability event bringing catastrophic risk. At the time, Salomon's terms seemed favorable. Buffett and Munger made decisions based on high probability principles, but investing is complex and uncertain. Low probability events always occur, sometimes bringing huge risks. The lesson from Buffett and Munger is that investing isn't just about simple buy and hold. It also involves confronting risk events, even personally stepping in to turn things around when critical. Buffett and Munger saved Salomon Brothers through wisdom, courage, action, and sterling reputations, once again showcasing their extraordinary capabilities. All right, that concludes our overview of Munger's investment career. Now we'll cover part 3. Munger's life wisdom. Munger was both an investment master and a profound thinker and mentor. Bill Gates said, "Charlie Munger is the broadest thinker I've ever met." As a revered thinker, Munger emphasized 3 key principles. First, cultivate multidisciplinary knowledge to build diverse mental models. Mental models are thinking frameworks that help gather, process, and act on information. Why build multiple models? Because our world is inherently diverse, interconnected, and ever-changing. Human society is a complex ecosystem. Stock markets, too, influenced by macroeconomics, industries, companies, policies, investor psychology, etc. When investing, multi-angled thinking helps identify core issues, creating competitive advantage. This requires leveraging multidisciplinary tools. Yet most people possess too few professional tools. Munger illustrated this with, "To a man with a hammer, everything looks like a nail," meaning single solution approaches fail. During this, one might ask, must we become omniscient polymaths? Munger clarified, "You needn't know everything. Just grasp fundamental, high-impact concepts." He championed interdisciplinary education, building his own models through voracious cross-field reading and expert dialogues. Munger's second principle, apply inverse thinking. He consistently approached problems backward. Example, to understand happiness, first study misery. To build great companies, first examine why they fail. Reverse thinking helps us shift perspectives, avoid mental inertia, and escape herd mentality traps. It's also a powerful tool for stock analysis. For example, Munger collected case studies of failed companies to identify their downfall causes. This practice significantly sharpened his stock discernment and risk prevention abilities. Munger's third principle, implement pilot checklists. A pilot checklist requires aviators to systematically verify pre-flight preparations. This mandatory practice emerged after a U.S. military aircraft crash. Munger noted, "Smart pilots always use checklists, no matter how experienced. Checklists force deliberate decisions, prevent oversights, and reduce emotional interference." His investment checklist covers 10 areas: risk assessment, independent thinking, capital allocation analysis, etc. Each contains sub-items, e.g., risk assessment includes margin of safety and avoiding unethical partners, demanding risk compensation, remembering inflation or interest risks, avoiding catastrophic errors and capital erosion. As an investor, create your own checklist using Munger's method. It'll transform your practice. That concludes Munger's life wisdom and the book's core insights. Munger loved Aristotle's saying, "Avoid envy by deserving your success." Munger truly earned his achievements. He weathered life's storms and achieved extraordinary brilliance. His life proves that through courage, reason, and applied learning, we conquer uncertainty and excel in life and investing. The results? All right, that wraps up our exploration of Charlie Munger's biography. Find study notes below the audio. See you tomorrow.